all-time highs are relatively common. Like if you go and look in the data, if you just look at stock indexes historically, roughly on a monthly basis, 20 to 30% of months, you're at an all-time high, depending on which index you're talking about.
I think we had 40. I think I heard there was 42 all-time highs last year.
I believe it. I mean, the market goes up, right? Like you're going to have all-time highs. That's just how something works when it goes up. But the interesting thing is investing at all-time highs has historically not led to worse returns than investing at all other times. I've seen some research even suggesting that investing at all-time highs gives you better returns. I don't know what horizon that's over. I modeled this out at a 3-year horizon, and there was nothing interesting there, so I just kind of scrapped the model. I found that if you invested rolling 3-year periods going back to 1926 in the US equity market, and this is just from my head because I deleted the spreadsheet because it was not interesting. Rolling 3-year returns, if you invested only at all-time highs, your return was nearly identical to investing in any month. So that's all I got. Investing at all-time highs doesn't matter.
The thing I would caution is if you do it to make it very rules-based, if you can, because you have the risk of becoming overconfident, especially if you get the first one right. Mm-hmm. You might increase the size of your bets going forward. So I would encourage people to make it very rules-based to avoid that.
So use the Merton share. If you must, do what Victor and James talked about in their episode 270.